All right, welcome back to another video. I just wanted to give you guys a really quick three things today. Two tools, and one other thing is just a message that I got from a book that I was reading. I was reading a book called Can't Hurt Me by David Goggins. So I want to give you guys a message from that. But first, I'm going to take you guys into my computer, and I'm going to give you guys these tools really quick. So really quick video today. I've got a lot to do, a lot of stuff with the military, a lot of stuff to get to. If you guys didn't get a chance to check out yesterday's video, I knew it wasn't going to be a very highly viewed video just because it is so intensive. It tells you everything that you need to know about income statements, about balance sheets, and about cash flow statements. So that one should be a gem for future use. Don't have to watch it all at one time, but anyways, let me just take you guys right into my computer so that we can look at these tools. These tools, one of them is going to teach you about insiders and insider trading, which is important. The next one is going to teach you how to pick a cheap stock, and the last one that you're going to want to stick around for that because that's a gem that I got from David Goggins, one of my heroes. So let's get right into the computer. Hope you guys can still see me, hear me. Move my mic a little bit. Hope that sounds okay. Well, I'm a little bit far from the mic. Let's move it a little closer. Okay, so don't want to waste too much of your time today or my time. So basically what this is we're talking about the magic formula. So magic formula investing comes from a book called The Little Book That Still Beats the Market. And basically what is the magic formula is all about is investing based on return on invested capital and a low price. So the magic formula basically seeks to give you a high return on invested capital within the stock and a low price to earnings multiple. So here's a passage from the book. It says, over a 17-year period from 1988 to 2004, owning a portfolio of approximately 30 stocks that had the best combination of high return on capital and high earnings yield would have returned approximately 30.8% per year. That means that 11,000 would have turned into just over 1 million. So why is that? Basically, why that is because return on capital is how much money you put into a business, how much money actually ends up coming out of that business. So how effectively does that business use capital to generate income? So what you're going to do is you're going to go to magicformulainvesting.com. Here you see you have to sign up first. I'm not going to show you how to do that because you guys know how to put in your name into a computer and enter an email and answer an email. So I'm not going to show you guys how to do that. And then you just choose either 30 or 50 stocks right here. Choose your market cap. So you could go 50 million. Let's say that you have a propensity towards, smaller, bigger stocks, whatever, doesn't matter. Typically, as I said in my last video, but that was an hour long, so I don't expect everybody to, that to be their cup of tea. But typically, smaller cap stocks don't have as much institutional attention, so they might not shoot up as much, or they may not be as popular, so they can have potentially higher returns. So anyways, I'm going to keep it at 50 million. All that said, so you just click on Get Stocks there. This is going to show you the stocks that have the highest combination of return on invested capital and low price to earnings multiple. So all of these stocks right here, basically how it ranks it is it ranks it 1 through however many stocks as far as return on invested capital, and then it ranks it 1 through however many stocks it's screening on price to earnings multiple. And these two have the overall lowest or highest ranking, lowest number, highest ranking, kind of like golf. So this is kind of how I screen for stocks. When I find them on here, I'll go look further into the stock. So, looking at the stuff that I was looking at yesterday in my video, that video, as we see, Altria is trading very cheaply. They've got a pretty good dividend. It's got a long dividend history. Things like HP. Some of these are busted, broken down. I used to see Tupperware in here. I think they have traded up massively. I was going to buy that stock, and now it's up like 50 or 60%. So that is that tool. Let me take you into the next tool, and that is tool for insider trading. This is actually from my friend, and I'm going to link both of these in the description. This one's called Insider Sleuth. It is from one of my friends that I work with, and I'm not sure how he made this. People are amazing. So anyways, we're going to go into MSFT, which is the stock that we looked at yesterday when we looked at how to look through all, the statements. And we're going to look at basically what insiders are doing. So really quick for those of you guys that are beginners, insiders basically means that somebody who works within the company. And we're going to look at what insiders are doing here. So MSFT, we're going to, ignore all this other stuff. You could obviously change that stuff when it's your turn to mess with this, but it's my turn right now. So anyway, submit. And we're going to see what insiders are doing. Yesterday I said that the stock was overvalued, and we come down here and let's look at this. We got date that the trade happened, issuer, that's Microsoft Corp, their ticker symbol, the person, their position, and what they did with the shares, how many shares, what price they transacted at, and how much the overall transaction costed. So acquired or disposed. What do we see Microsoft insiders doing? I said it was overvalued yesterday. What are insiders doing? They're all disposing of the shares. They're all selling. Insiders are selling. Let's try another one. Why not? Let's see if he's got Tesla in here. And once again, I have no financial incentive. I just want to show you guys some cool stuff. So let's see if Tesla's in here. People are disposing of the shares. See back here, they transacted at 700. People are disposing of the shares at 300. They were buying back here when it was down in the 200s. When it was in the 300, they're disposing. Elon Musk was buying. So as you can see, it's a potentially good tool. I mean, you can see when you can see what insiders are doing, you can basically see what people who own the stock think of the company at the time. So last thing that I wanted to share with you guys, which is from the book Can't Hurt Me by David Goggins. If you ever get a chance, that shit is motivating. Listen to that book. That book is awesome. I'm a little bit into it, but one of the great messages that he's already shared with us is a lot of us have goals, and some of those goals we know that it's going to hurt. So we want to seek out those goals, but we're coming at it the wrong way. We're coming at it as if, what did he say? He said, whenever we have this goal and we want to get there and we know that there's, a lot of just shit between us and that goal, what we seek out is motivation. We seek out someone to motivate us when we know that goal, getting to that goal is going to be painful. And what we need to seek out is pain, because that's how we're going to get to the goal, is by going through that pain. So I just wanted to leave you guys with that. Don't seek out that motivation, because when that motivation goes away, and you seeking your goals, you're going to quit. When that motivation goes away, and you maintain in your marriage or something, you're going to quit. You need to seek out that pain. You need to seek out that uncomfortable moment. And anyways, hopefully you guys enjoyed this video and get some value out of these tips. Do go back and look at that video yesterday. I'm sure that no matter how advanced of an investor you are, you can potentially find some good gems in that video. Speed it up if you need to. Hope you guys like this video. Hit the links down below, because I always got to self-promote, and see you guys in the next one.